President Cyril Ramaphosa will not step down after the G20 summit. That's according to his special envoy for strategic relations, Bejani Chauke. Chauke dismissed reports that Ramaphosa planned to resign following the global leaders gathering later this month. He called the speculation disturbing and devoid of truth, adding that the administration remains stable and focused on delivering for South Africans. In the meantime, Gauteng's economy is set for a revenue boost as the province prepares to host the G20 Leaders Summit later this month. Gauteng's Tourism Authority expects an additional 3.6 billion rand in revenue, driven by international delegates, business events and visitor spending across hotels, restaurants and transport. The summit will take place on the 23rd and 24th of November. South Africa's private sector lost momentum in October. The S&P Global PMI slipped into contraction territory at 48.8 points. This marks its first decline in 7 months. Output and new sales dropped at their fastest pace since March as weaker domestic demand and lower exports weighed on activity. But there were some bright spots. Delivery times improved at a record pace and input costs rose at their slowest rate in more than 5 years, helped by a firmer rand and easing inflation. Solid, that's how Goldfields has described its third quarter performance. The bullion producers posted a 6% rise in production and a 10% drop in all-in sustaining costs, helped by higher sales. Net debt, meanwhile, dropped sharply to $791 million, driven by solid cash generation and the disposal of non-core assets. CEO Mike Fraser says the group remains on track to meet its full-year guidance, with production expected at the upper end of its target range. Cell C is heading to the JSE. Its parent company, Blue Label Unlimited, has announced plans to list the mobile operator on the main board. That will happen via a private placement of shares held by Blue Label's prepaid company, which aims to raise about 7.7 billion rand. Cell C itself won't receive proceeds. Instead, those funds will go towards debt reduction, dividends and working capital. Cell C CEO George Mendes says the listing marks a significant and exciting step in the firm's growth story. In international news, Novo Nordisk, the manufacturer of Wegovy, has reduced its projected full-year profit and sales expectations in an early blow to the Danish drug maker's new CEO, while it strives to claw back lost ground in a fierce obesity drug market. Here's more detail in this packaged report.
Novo Nordisk lowered its full-year profits and sales forecast. It's a sign the challenges facing the Wegovy maker's new CEO are still a drag. Mike Dustar took over the Danish firm in August under pressure from investors to regain ground in the obesity drug market. Competition from US rival Eli Lilly and copycat drugs drove Novo's stock down this year. The share price plunge and slower sales growth led to a change of CEO and board shake-up in recent months. But Dustar's first quarterly results showed the firm now expects full-year operating profit to grow between 4% and 7% in 2025. That's down from an earlier forecast of between 4 and 10%. Dustar blamed the lower guidance on smaller growth expectations for the company's best-selling weight management and diabetes medications. Total sales in the period rose 5% to $11.71 billion, below analyst forecasts. Operating profit also fell 30% to $3.65 billion during the quarter. The stock dropped heavily at the open on Wednesday but recovered to trade 1% higher.
And British retailer Marks & Spencer has reported a 55.4% slide in first half underlying profit. This reflects the impact of an April cyber hack that forced it to suspend online clothing orders for 7 weeks and also hit food availability. Here's more on that.
Marks & Spencer reported a slide of over 55% in first half underlying profit Wednesday. The British retailer was hit by a cyber hack in April that forced it to suspend online clothing orders for 7 weeks. It had earlier estimated the cyber attack would cost it more than $390 million in lost operating profit in its full year. But M&S forecast it will have fully recovered by March next year, adding that it was looking forward to a good Christmas. It hopes to halve the hack's impact through insurance, cost control and trading actions, The group made adjusted profit before tax of $247.1 million in the 6 months to late September. That's down from more than $500 million in the same period last year, despite an increase in sales of over a fifth. M&S was forced to suspend online clothing orders for nearly 2 months and click and collect services for almost 4 due to the hack. Clothing and food availability in stores was also hit, while additional waste and logistics costs were incurred. Before the hack, M&S was starting to see the benefits of a turnaround plan that had been running since 2022 under CEO Stuart Mackin. The group achieved its highest annual profit performance in over 15 years in its 2024 to 25 year. Shares in M&S are up over 3% so far this year, having recovered most of their cyber hack losses.